Bitcoin sellers lose historic $7.3 billion in 3 days of pain. Everyone from short-term holders to mining companies has locked in huge losses as Bitcoin's price struggles to stay afloat. In just 3 days last week, Bitcoin investors saw the largest realized loss ever, locked in by trading, as a Bitcoin sell-off saw investors bleed $7.3 billion. According to blockchain analytics provider Glassnode, the last month has seen a sustained crash that pushed Bitcoin's price below $20,000 for the first time since 2020. About 555,000 Bitcoins were traded between prices of $18,000 and $23,000. According to the firm, long-term holders liquidated about 17,800 Bitcoins at prices below $23,000, with a number of them realizing losses as high as 75%. The last 3 consecutive days have been the largest USD-denominated realized loss in Bitcoin history. Glassnode wrote in a tweet on June 19th. Glassnode noted there were other trends hurting not just long-term holders, but also miners and short-term holders. Miner wallet balances seem to have stagnated, spending about 9,000 Bitcoins while holding on to another 50,000 and pulling back with a 10% decrease in hash rate, the total computational power used to process transactions in a blockchain. Since an all-time high in early June, Bitcoin miners have been feeling the pain beyond wallet balances. However, the Financial Times reported that shares in listed mining companies like Marathon Digital and Hut 8 have fallen around 40% over the past month, with some firms having to take machines offline as energy costs increase. Bitcoin's price drops, and funding has dried up from capital markets. A wave of acquisitions and takeovers are anticipated as a host of mining firms use the bull market to massively expand operations by taking on high-interest debt instead of liquidating Bitcoin reserves. If the price continues to crater or remain at bearish lows, it'll start to threaten lenders who underwrote such loans, leading to the risk of the creditor getting stuck with bulky, illiquid machinery that loses money every second without power. Blockworks writes, many investors are still holding on to their Bitcoin. However, with massive on-paper losses, if we assess the damage, we can see that almost all wallet cohorts, from shrimp to whales, now hold massive unrealized losses. Worse than March 2020, Glassnode tweeted, the least profitable wallet cohort hold $1 to $100 Bitcoin and have unrealized losses equal to 30% of the market cap. At $17,700 Bitcoin's lowest point over the weekend, only 49% of the token's supply was priced at a profit. Historical bear markets have bottomed and consolidated with between 40% and 50% of supply in profit. Glassnode reported, #Bitcoin investor conviction is seriously being put to the test. It's not clear if Bitcoin and the rest of the crypto market have bottomed out at this point. While Bitcoin's price has risen above the $20,000 level that many analysts warned as a key price support, there are growing concerns that many key institutional players in the wider crypto ecosystem are illiquid and teetering on the edge of insolvency. Crypto has seen a growing number of bailouts, but it's hard to imagine this will be the end as crypto winter threatens to settle in for a long time.